Good evening, everyone. I'm Smita, and out of the verticals I look after in the bank, I will talk about government and institutional business and alternate banking channels. So why government? Historically, all of us know that government funds have been with nationalized banks, and I would say that they have been enjoying CASA without making much efforts because all the government accounts are with nationalized banks. In last 3 years, the government has opened up agency business for private sector banks and also lifted embargo in many states on doing business with private sector banks. And that is where opportunity has come up. What have we done and why we are focusing here? So we have government business is all about payment and collection, and it touches everyone's lives. I'm sure all of us are paying taxes, all of us are paying bills on a daily basis, and somewhere government touches all our lives. And payment and collection has to happen through banks. So we have built digital solutions which actually differentiate us and help us to actually take the market share from nationalized banks, and actually in line with Digital India initiative of government, we are able to provide the solutions. On the institutional side, education, religious institutions, healthcare touch everyone's life. Now, today all of us know that in a play school, today the fees could be between 5,000 to 25,000. And ultimately you have to pay from your bank account. Whether you use any payment mode, you have to use a bank account. Now here, giving digital solutions to educational institutions, universities, colleges, coaching centers, etc., is a huge opportunity. I mean, more than 2.5 lakh crores is the budget of Government of India for educational institutions. Similar budget is for healthcare institutions. We all know that religious institutions touch our lives. 40% of tourism today in the world is religious tourism. And all of us, chahe अच्छे दिन हो, चाहे खराब दिन हो, lot of us visit temples. And temple जाते हैं तो जरूर कुछ ना कुछ पैसे चढ़ा के ही आते हैं, और वो पैसा कहीं ना कहीं बैंक में आना चाहिए. So it is a huge opportunity to actually provide again digital solutions. So today you will find in all the marquee temples Hdfc Bank's QR code, and if somebody is paying through them, it obviously comes into my bank account. So I'm just setting this context before I actually play audio visual of my presentation, which will showcase what are the solutions which we have developed for government and institutional business, and what is the kind of market share we are looking for in next 18 to 24 months. I must tell you that out of the total deposits in the bank, which RBI publishes, HDFC Bank within the short time has already got 6% market share, and we want to go to 10% market share in, I would say, 12 to 18 months time. Why alternate channels at this point of time? Now, India has 6,40,000 villages, out of which 1.9 to 2 lakh villages have 72-73% of the total consumption, or total, I would say, economy of rural and semi-urban area. And if we focus on that, we will be able to anyway double our market share, as Arvind was talking about, in less than 24 months. Because the branches are there. We are expanding our branches. And if these branches get supported by partner network, look at what is the scale we can build up. And what have we done differently? The fact is that historically, the agents, the banking correspondents, customer service points were looked to open Jan Dhan accounts and do domestic remittances, which is a huge business in India. But what HDFC Bank has done is that over the last 2.5, 3 years, we have built our technology stack, we have built our APIs, journeys, APIs, and integrated them with our partners. Today, we can offer all payment, asset, liability products through our partners and through our agent network. And this is what we will tell you how we have built up. So let me just pause here, play the AV, and then be happy to take questions later.
The opportunity across the government and institutional segment is enormous. We have only just scratched the surface. Our strategy focuses on 3 pillars. The first is central government, state government, and local bodies. The second is the institutional business, encompassing educational institutions, trusts, NGOs, residential societies, religious bodies, healthcare clubs and associations. The third is expanding reach by leveraging alternate banking channels and partners to increase the reach and distribution of HDFC Bank Pan-India. With flows of over rupees 39 lakh crores budgeted for FY 2022-23 for various schemes and payouts, Government of India has unlocked a large revenue pool by allowing private sector banks to conduct business for centrally sponsored schemes and central sector schemes. This flow is augmented by the Finance Commission fund flows that have a 5-year horizon. Highlights of government business. HDFC Bank is a leading bank in managing government fund flows. Of the total 16 lakh crores of fund flow from the centre to the states, about 26% flow through HDFC Bank pipes. This share will only grow further. We target retaining 8% to 10% of these funds by acquisition of vendors and beneficiaries using Saksham and beneficiary accounts. The Single Nodal Agency is a new construct introduced in September 2021 by the Government of India. HDFC Bank is recognized by the Ministry of Finance as one of the top 5 banks processing payouts, including DBT transfers through the Public Financial Management System (PFMS) under the aegis of the Single Nodal Agency construct. Of the 150 central sponsored schemes, the bank focuses on top 35 schemes that account for 86% of the total budget allocation. The bank is targeting 20% market share in these top 35 schemes in the current financial year. Public Financial Management System (PFMS). The bank aims to exponentially increase its share across the number of registered agencies from 2% to 10% in the current financial year. This will lead to a 3 times increase in volumes over the next 18 to 24 months. HDFC Bank is empanelled as agency banker to the Government of India. HDFC Bank is the market leader for direct tax collection with 25% market share. It also holds a significant share of GST collections. At 14%, the bank aims to maintain its current market share for direct taxes and achieve 20% market share for GST and custom duty collections in the next 12 to 18 months. New business opportunities have opened for private sector banks under various central and state government business. Pension opportunities. The target for the pension book is rupees 15 to 20,000 crores in the next 3 years. Opportunities on eNAM ecosystem. HDFC Bank was integrated in the government's National Agriculture Market eNAM portal in November 2021. The bank seeks to garner 10% market share in the next 12 to 18 months, focusing on all constituents across the agricultural value chain. State government opportunities. The total opportunity identified across states is rupees 5.75 lakh crores. The bank's goal is to secure a market share of 10% to 15% in the next 2 to 3 years. Our value proposition. HDFC Bank leverages its wide branch network along with alternate and digital banking channels as well as partnership networks for conducting its government business. Technology plays a pivotal role in acquiring business, given the volumes and values of government collections and disbursements. HDFC Bank Collect Now is a robust solution for collection and payouts. The comprehensive solution is offered to government and institutional customers to manage their businesses effectively. HDFC Bank, through technology service providers, facilitates plug-and-play solutions. Few examples of plug-and-play solutions are technology for agricultural procurement. As direct payments become the norm for agricultural procurements, the bank has been at the forefront in facilitating latest technology to state agricultural boards. We aim to take this forward in 10 to 12 states in the next 12 to 18 months. The e-tendering and e-auction platform is live in 6 states with 8.5 lakh crores of EMD collections, and we are looking to expand our footprint across 12 to 15 states in the next 18 months. Government Project Monitoring System. This solution helps governments to reduce time and cost overruns Currently, over 5,000 projects are being monitored across 10 live setups in 5 states. The bank is looking to leverage this solution for business across the rest of the states in the next 15 to 18 months. Sli and Csr Initiatives. The disbursements done by the Inclusive Banking, Sustainable Livelihood Initiative and Agri teams are showcased as part of a commitment to participate in the nation's development and act as enablers to acquire business. Institutional business opportunity. India has more than 75 lakh institutions with flows of rupees 17 lakh crores. The education and healthcare segments account for close to 85% of the total pool. Other segments include religious institutions, housing societies, trust or NGOs and clubs, which account for the residual 15%. Education. Approach to drive growth. The bank intends to adopt an ecosystem-based approach to harness the opportunity offered by the education industry. Examples include comprehensive solution with key features for managing fee collection, salary payments, payroll management, etc. Partnerships with edtechs adopting an API banking approach to target growing segment. RelTech, the new mantra across religious institutions. India is a country with 30 lakh religious institutions. These are estimated to receive donations of approximately rupees 23,000 crores per year from the public. This also includes 36,000 temples managed by 23 state governments' endowment departments. Leveraging digital solutions integrated with the bank to collect donations, the bank seeks to achieve 10% market share in the next 15 to 18 months. Aiding convenience across housing societies. We estimate urban India has approximately 6 lakh housing societies in India that offer a revenue pool of 72,000 crore rupees. The bank facilitates a wide variety of solutions, including collection of maintenance fee, event booking along with viewing notices, managing vendors and payments to them, etc. Our mission is to tap the opportunities through various initiatives and double the government and institutional book in the next 24 months. Technology and digital momentum shaping the country give us conviction that it is the right time to build distribution in pockets of opportunities and support the existing network across all geographies. The adoption of technology, penetration of mobile and internet in the country opens avenues to capitalize an untapped fertile ground with large pool of opportunities by digitally connecting the last mile. We have tied up with marquee partners that have a vast agent network. Distribution structure for a new vertical will work in an octopus framework. Existing branch is at the core, which is supported by 5 to 8 agents centers from the partner tie-up, covering a radius of 10 to 20 kilometers, acting as Hdfc Bank's distribution arms. The authorized agents centers are capacitized with the digital infra, including laptop, printer, webcam, etc. The bank supports these fixed-point delivery centers with branding, creating visibility, and integrating product APIs to function as an Hdfc Bank mini branch and cross-sell all our banking products. The bank rides on the partner network to connect and offers liability, assets, payment products, EMI collection, cash deposit and withdrawal through these centers. Digitally assisted and unassisted journeys are in play with a combination of fintech and lead APIs, which delivers a seamless and quick user experience securely. We have taken a platform approach, and more than 44 APIs power the customer journey from origin to the source system where the business is booked. Building alternate channel brings in several benefits. A. Nil infrastructure cost to the bank with minimal manpower requirement. B. Low cost of acquisition for every incremental business. C. Replacement of loss-making branches and migration of small value transaction. D. expansion of market for bank and increasing collection capability in deep geographies. There is a parallel contribution on the societal side, lending our hand in nation building and participating in government's key agenda of financial inclusion and women empowerment. The channel has already done more than 2.15 million products with consistent delivery of 1 lakh products per month. We are on a trajectory to scale up to 5 lakh products per month in the next 12 to 18 months.
Thank you. And I just wanted to add to this that rural was always there. What has changed is adoption of technology in rural areas and how now we are leveraging adoption of technology to retail and sell our banking products to the last mile in the country. Thank you, and happy to now take questions.
Thanks. If we could just have the mics going around. Yeah, please. Sorry.
Thank you so much. As you mentioned on the service part, the scaling which you are giving, and the emphasis was also on to improve the service capability. So currently, where are that parameter stands? Like we give internal targets on the scorecards for the asset side. On the service side, where you stand and where you want to take it?
So we shared this external benchmark of the Net Promoter Score. You saw that score of 54, and we're tracking that versus every other bank. Other than this, what we do is, so this is the top-down, which is compared with the other banks. Other than that, the other parameters that we look at, interaction NPS in retail branch banking, in our phone banking. So each of the teams, but they represent the scores for the bank. If I have to tell you about how the internal scores are trending, I think we started this Net Promoter Score journey about, 2 years back or so. We've roughly improved by about 20 to 25 points in that 2-year period. But again, as I said that, I think honestly, if you ask me on a scale of 1 to 10, vis-a-vis our ambition, because we don't want to use this to browbeat about that we have achieved enough. We haven't achieved enough. We'll be honest enough to say. I would rate ourselves at maybe, significant part of journey is yet to be undertaken. But I think the start is great. You go to any branch, and I invite all of you, ask any branch manager what's your smile score, because that is outside in perspective. Then we have an inside out perspective, which is service quality index, where we have our TATs, where we have other things like activation time and so on and so forth. But that is all about how well the machine is working. NPS or smile score is all about, finally, is that machine generating customer delight, or customers are not feeling good about it? Because recently we changed our TATs, from 7 days kind of TATs to 2 days, 3 days, because I may come up and tell you that I am achieving 99.7% of my TAT achievement. But the fundamental question is my customer happy with the TAT that I put in the first place? So slides and statistics can sometimes be misleading. I think this journey is about honesty. This journey is about authenticity. This journey is emotive. We're very proud of the way we started off in first 2 years, but I think we have a significant road to travel.
Sure. And one more question on, as you mentioned about the government side and institutional, that is the asset side which you are looking as a flows. But can you give some color on the revenue potential and the profitability you are doing? And more importantly, any scheme where you can give a more detail, for an example, Manrega or etc., where the flows come from the government and it goes to the masses, and how you tap that masses into the liability and the asset side.
Yeah. So you saw that in the presentation, out of the 16 lakh crores of funds which flow through banking sector, while the government budget is much more. But finally the money goes to the beneficiaries. It could be, while you can talk about Manrega, you can talk about various, farmers, etc. So we have achieved the first leg, which is getting integration with government departments to get the funds flow through Hdfc Bank. And second step is what I mentioned in the presentation, is to work towards retaining those funds. So we have already put up products, beneficiary and Saksham accounts, and a lot of focus now is to get beneficiary accounts. So for example, highways bante hain and land acquire hota hai. Now land acquisition, government has to do, and government has to pay money to the farmers or the landowners who are there. So we acquire those accounts so that the funds can be retained. So this is a journey which we have started. See, first journey was to get government to approve agency business for private sector banks. And I think we have done a reasonably good job by collections, etc., and getting funds flow. The next journey definitely is to work on beneficiary and Saksham accounts big time. The other thing which you mentioned about the schemes, see, the government business is changing in last 2 or 3 years, if you have seen, and what we mentioned about single nodal account. So the money is moving from central government to state government, and they want efficiency in funds, and that is why you need digital solution in payment and collections. So single nodal account is where a lot of now money will flow, and we have already acquired 16% of those accounts, and our aim is to get 20% of those accounts. Now, the money in those accounts come as and when the schemes are approved and fund utilization certificate is governed by the respective state government. You talked about revenue potential. So one is the flow which comes. Secondly, when we engage with government, there is potential for lending, potential for forex business, potential for salary accounts. You we mentioned about pension. The salary bill of almost every government department and corporation is almost 40, it can range between 40 to 60% of the total budget allocated. So salary account is a huge opportunity, and you would have seen Rahul, Arvind mentioning about how everybody is focusing on this segment. So there is a huge revenue.
Just whatever the flows which different ministries you are getting or for agency, do they get a rotation basis to the other bank also? Is government?
No, so, sorry, let me answer. So, CBDT collection was, besides nationalized bank, it was opened up only for ICICI and Hdfc initially. Last year, they have opened for all private sector banks now. So, it is dependent that how many customers you have and what is the kind of engagement you have. And that is where you see, we are very happy to speak about, while CBDT collections we have been doing now for almost 9 years, GST collection for last 3 or 4 years. Customs duty we started in January, and we already have a 7% share, which is reflection of our customer base as well as the relationship management which we have. So you may have multiple accounts, but we want the funds to move through our accounts.
We'll take the next one from Hiten.
This refers to the slide 2 in your presentation, where you were saying the growth of CASA and retail TD, it has virtually doubled in last 3 years. And the ambition is also of doubling it in the next 3 years.
3 to 3.5, yes.
Yeah, 3.5 years. But given what we heard in the initial presentation, the focus will be on liabilities. That's a challenge which you have to prepare before the merger. So I was a little curious. I thought that next 3 years should be faster growth in liabilities versus the last 3 years that you reported.
So, I mean, if you just look at our retail deposit book, it's roughly about 11 lakh crore, right? So if you are saying doubling from here in 3.5 years, it is another 11 lakh crore on that large base. At an absolute number level, I mean, difficult to give you targets for this financial year, but it's going to jump up. For example, let's say we delivered on retail deposit side roughly about 180,000 crore, 185,000 crore last year. So it's going to jump up to something like 3, 4, 5, that kind of number. So when you look at absolutes, you will see the absolutes are very, very large, right? And that more than meets our sort of the requirements. And so one is looking at doubling versus doubling. The second is looking at an absolute rupee value, how much are we adding?
Sure. And another question was on branches.
Sure.
So again,
I heard this one is a favorite one since morning. So
last 5 years, your number of branches has grown at a CAGR of 6%.
Okay.
You're guiding for doubling the branches in next 3 years.
No. So first of all, I think I'm not guiding for any particular number of branches. I've tried to explain. Sashi might have given you his view in terms of how he foresees it. But let me explain this point really, really well. There's no number in mind. I am not going after expanding. There's no number which is coming top down. Okay? It's all a bottoms up plan. And I'll tell you this little bit in detail. For example, if I have, I'm sure Sashi talked about Kilong because he went there in Himachal to inaugurate that branch. 500 crore deposit market, no private bank in that town. None. We're the first one to enter there. If you pick up 10-12% market share in 2 to 3 years' time, that's 50-60 crores, right? Now, when I cut my RBI centers, they could be X number of centers, right? I'm not giving you numbers, but I'm telling you the thought process in terms of building blocks, which are above 300-400 crore in terms of current size. Leave the growth that catchment will also grow to. Leave that aside. That's a top up, right? And I don't have a presence there today. Or alternatively, at layer 2, there is a center which is 1,200 crore, and I have only one branch which is 120 crores, and that broke even 4 years back, right? So a lot of our expansion is going to come in semi-urban and rural, right? There is no number that we are chasing. It is going to come up through this bottoms-up process. And bottoms-up process also doesn't throw up that I have to do a branch. It could be a branch. It could be a smart banking lobby, which is more of a captive concept. It could be a digital banking unit, right? And as I explained that smart banking lobbies and digital banking units are coming to us or almost at the rental cost of an ATM, right? With 1 or 2 resources added. So they're extremely, extremely cost efficient. Based on the catchment potential we see that whether we put up a phygital small branch with, let's say, 1,200, 1,300 square feet, or a 500, 400 square feet ATM kind of extended ATM kind of a smart banking lobby. So it's a fairly P&L driven exercise, customer driven exercise, and catchment potential driven exercise. So whatever is going to come through is going to come through this bottoms up number. Yes, there is a number that has come up when we have ran this exercise in last 3, 4, 5 months. Okay, for next 1 or 2 years, but we run that for just about 1 or 2 years. We do see a potential where it is going to be not just extremely viable, but it's going to be an eye-popping opportunity. But remember, last 3 years we extended our branch expansion, but we cut down our break-even tenors, right? Our break-even tenors prior to 2017-18 were in the region of 30, 36 months. Couple of years for metros and close to 3 years for, average is about 30 months or so, right? Now 60% of the branches, we are breaking even in 12 to 24 months. There are branches that I explained to you in the morning and we can share those names. 6 months, 9 months we are broken even, right? Now if you have not done those branches, which are breaking even in 6, 9 months time or 14 months time or 15 months time, if you don't do them, we are just committing a harakiri to our own growth. Merger, no merger. End of the day, we've got to do the right thing from the opportunity the point of view that we see. However, merger is a contextual thing, and I think it is also going to aid in that process, right? And honestly, my view is even if the merger or no merger scenario AB, I'm agnostic to it. Even then, we would have done the same, because it makes business sense for us to, to do that. So it's a bottoms-up kind of an exercise driven through 3 axes: market opportunity, customer lens, financials, the P&L financials in terms of the top line, bottom line, and the break-even period that we'll be able to do. And the reduced break-even that we have been able to achieve of 18 to 24 months or 18 months on an average versus about 30 or 35 months, I think we'll be able to sustain this primarily because of our approach. Okay, we have 500 cluster heads. Every cluster head has got this kind of a rewarding map that I showed you. What is a pin code? There could be 10, 15 pin codes in a district, which is high, medium, low potential. Then you zoom into that pin code. Then you understand that here the school is, here the college is, here the bank branches are, here the BCs are, not mine, industries. And then analyze that which micro pocket should I have a SBL or a DBU or a small branch or a BC. If it's a BC, then we rush to Smita. Hey, Smita, this is a very low potential branch. We need a very, very low cost, variable cost model. We'll just put up a BC here, right? No, so that's how we try to work it out. And octopus strategy you saw is really, working out in that. Smita,
just to add, like Pulwama, Anantnag, Kargil, Purulia, all these places have huge amount of deposit base. Now, it may not be easier to have many branches out there, but when you have partners who already are working there and integrate your product APIs, you obviously will get that share as well. So complementary strategy with branch expansion, digital units, agent network, partner network, helps us to reach out to all these pockets of deposits.
So on branches, it's a bottoms-up exercise, right? The number is an indicative one, but we're going to test our parameters versus the bottoms-up approach, and that's what we're trying to explain here as well.
Yeah, in the interest of time, we'll bring this session to an end. Many thanks, Arvind. Many thanks, Smita. Thanks a ton.
Thank you.
We'll now begin with the next session. May I call on stage Parag Rao, Group Head, Payments Business, Digital and IT, Anjani Rathod, Chief Digital Officer at Hdfc Bank, and Ramesh Lakshminarayanan, Chief Information Officer of the bank. We just have a very quick, because the slide deck is very similar to what was shared a couple of days back, we'll not go through the slide deck completely. There'll just be an opening remarks from Parag and team. And then we'll open up for Q&A that might be more efficient. There's also a little bit of time for demo that Anjani can then take us through. Thanks.